guys, Trump is calling for a 1 year cap on credit card interest rates at 10%. We're going to break all of this down and everything you need to know right now. Let's get right into it, guys. So, first things first. Now, what Trump is proposing and what is confirmed so far. Okay. Now, Trump has publicly floated around the idea of him saying that, hey, we're going to put together a plan to get a 1 year cap, okay, a 1 year cap of 10% on credit card interest rates. And he even set a start date. And I think that's what's got a lot of people trying to figure out, is this going to happen or not? And the start date is supposed to be around January 20th. Okay. Now, key things to pay attention to is that he said around January 20th, and that's been per multiple reports. And now here's the thing. A lot of the markets, they took it seriously enough that card issuers and banks, they started selling off on January 12th. Okay. So this is something we need to keep an eye on. And as you guys can see right here, even Capital One and many others, but shares in the US credit card issuers, they slide after Trump calls for a 10% rate cap. Okay. So listen, let's break all of this down. By the way, guys, tomorrow I'm going to be doing a free class on all of the 2026 credit changes. There are some changes that have already been passed, that have been approved, and I'm going to break all of this down as a free class. Scan the QR code or text the word change to 708-346-5613, and I'll see you guys there on tomorrow. But check this out. Now, can a 10% credit card cap actually be done? We've seen Trump talk about a lot of different things since he's been in office. Is this something that can be done? Okay, so let's go ahead and open this up a little bit more here. And here's the thing: here's the truth. A nationwide 10% cap would almost certainly require Congress. Okay, so they would have to approve this. They would have to vote on this. All right, but we have seen a lot of things not need Congress for some reason. Okay. Now, multiple analysts and major outlets point out that the president doesn't have clear unilateral authority to impose a sweeping credit card APR cap by himself. Okay. Now, let me know your thoughts about this inside the comment section. Do you think that this could help us, in the American economy, or do you think it will hurt us? Let me know your thoughts. Or do you even think it's going to happen? Okay. Now, there has already been a legislative pathway. There have been bills introduced in Congress. Now, mind you, this was last year, and I believe it was in May or June of 2025, that would temporarily cap credit card interest rates at 10%, but nothing, essentially it hasn't moved since then. All right. Now let's keep going. Now, why we can't just do this? Why the just let the states do what they want to do doesn't work today? Since the Supreme Court's Marquette decision in 1978, national banks can generally charge the rate allowed in the state where they're located, which is a big reason that rates escaped many state usury caps. Okay. Now, here's the thing, though. That doesn't mean that it can't, that they haven't tried it before, as we can see. But here's the thing, but it's been a pattern. So again, pre-1978, many states had lower usury caps, okay, and often cited around 10 to 12% ranges that applied more broadly before modern preemption dynamics took over. Okay, essentially changes in the industry. Then in 1991, the US Senate voted for a 14% credit card interest ceiling. Okay, and it ultimately didn't become lasting law. So again, this happened when they voted for it in 1991. Now, as of recently, politicians have repeatedly introduced cap proposals, for example, 15% in prior years. More recently, it was bipartisan at 10% talk, but again, it never went anywhere. All right. Now, this is how it would hit banks and credit card companies. If a hard 10% cap became law, if it became law, banks don't just eat the cost, just so we're clear. They're just going to adjust their business model. What does that mean? Number one, that means tighter approvals. So when you are able to apply for a credit card and you get approved, you not more than likely, there's a chance you may get denied. There's a chance they may ask for proof of income. There's a chance they may give you a lower limit. especially for people that are subprime. What does subprime mean? Subprime means that your credit score is under 650, under 600. That's subprime. Okay. Now, to protect their losses, also more fees. They're not going to miss out on this money. Banks are going to make their money. Now, more fees or reprice products, which is annual fees, reduce grace flexibility, and less generous promos as well too. So, like for example, you get 100,000 points for opening up such and such credit card. That may not be an option. Annual fees may be higher. So, when there's a lot of no annual fee credit cards, there's a chance that they may increase those to replace that lost revenue. These banks are assuming that they're going to make a certain amount of money per year, just like you do at your job, right? Just like you do in your business, just like you do with if you're driving Uber or whatever. You have an idea of how much money should be coming in to replace that, right? This is the standard response pattern under price caps. Exact mix would vary by issuer. Okay. Now let's go a little bit deeper. Let's go deeper, guys. All right. So now, how it would hit banks and credit card companies continued. Okay. Now, let's go into rewards. Like we just talked about, rewards are often funded by a mix of interchange fees. So when you swipe your credit card, then you get charged, 3.5%, 3%, 4%, 5%, whatever that is. Okay. Plus interest income, which is the money that they're actually making from it. A cap a cap raises the odds of weaker rewards. Essentially, credit cards won't have that much of use for them, especially for certain segments, like if you're talking about groceries, gas, vacations, things of that sort. Now, co-branded card economics are going to change. So you guys have those Southwest credit cards with Chase, or those Delta cards, or whatever type of card you're looking at. Those airlines and retailers could feel it because those co-branded card partnerships are a major revenue engine. They expect you to spend money there. But if there's a 10% cap, they're not making money if people aren't, essentially carrying those balances, or less money, I should say. Now, here's why people love the idea. I know some of you guys are thinking, well, Calvin, it's real simple. Yeah, but some of these people are thinking about different types of things. Obviously, it's going to be an immediate relief for people carrying balances, okay? But if the APR drops, more of your payment is going to hit your principal, which means the bank is taking less of the money to apply it for their pockets, okay? All right. Now here's another thing too next. Less debt snowballing during inflation or high cost periods. When interest rates were a little bit higher months ago, and we already forgot about that, right? And so again, that's going to make your money stronger. You're going to be able to pay these balances off faster. Now, it could also reduce cross subsidies, where the heaviest interest payers effectively fund rewards enjoyed by higher income paying full users. So people that are carrying balances are really the ones that's going to be paying the rewards for people who pay in full, for people who pay the bill within 30 days. Okay. And this is an argument that a lot of people are talking about. Now, let's go into the cons, because I know some of you guys are thinking there can't be any cons to this, right? Let's dive deeper. Reduce access to credit. Lenders may shut out higher risk borrowers if they can't price risk at 10%. Essentially, they're saying that, listen, certain credit scores don't deserve to have 10%. We need to have a risk factor so we can collect our money. Then people are also going to shift to other borrowing, which we're already starting to see right now with buy now, pay later. People may be pushed towards personal loans or other alternatives, which can be better or worse depending on the product or borrower. Okay. Listen, I've seen all scenarios. I've seen people max out their credit cards, can't pay them. I've seen people, there's a death in the family and someone has to pay for the funeral. Family doesn't have the money. Somebody in the family has a credit card, swipe. Or it's wintertime, the furnace goes out, you need to transfer your money over, but it's the weekend. Banks are closed, you need your credit card. Swipe. So those are those things. You can't take out 6,000, 5,000, 3,000 at the ATM. Okay. Potential fee creep. If interest income is capped, expect issuers to haunt revenue elsewhere. They're going to make their money. And what does that mean for the people? Now, legislative reality. Okay, now check this out. Even if it's popular and everybody wants it to happen, it's a heavy lift politically and technically Wall Street analysts are publicly skeptical that it moves fast. We're already seeing the market respond to some of this. Okay. Now, what should you do with this information right now? If you don't remember anything I said in this video, write this down. Okay. Number one, don't plan your budget around a cap happening. Like, oh, well, I'm just going to pay a little bit here because you never know. We may get the 10%. Guys, I'm telling you, I don't care that he put a date on it. Listen, I'm from Memphis, Tennessee, and there's a rapper in Memphis, Tennessee named Yo Gotti, as we know. And he has a very popular song, and it's called Put a Date on It, right? Either way, I don't care that Trump put a date on it. This is not going to happen around that time frame. It's not enough time, to be honest, okay? Now, treat it as possible, but not promised, okay? Especially around January 20th. If you carry balances right now, which means your balance is not at zero and you don't have the money to pay it off, here's what you need to do. You need to prioritize your payoff strategy, okay? For example, does the snowball method work for you? What is a snowball method? Okay, the snowball method is, let's say you have 3 credit cards and one credit card has a $200 balance. The next credit card has a $500 balance, and the next credit card has a $1,000 balance. You want to pay off the smallest credit card as fast as possible, and then take that same money that you were paying anyway, your budget allowed for it anyway. You then apply that to the second credit card, and then you do that, pay off the second credit card, and you go to the third. Then you have the debt avalanche. This is where instead of you focusing on the smallest balance with like with the snowball method, you're focused on which one has the highest interest rates first. Okay, that's how you do that. Now, also, you can consider a 0% balance transfer card only if you can pay it down before the promotional fee ends and then the fees make sense. You can also do debt consolidation with a personal loan. Now, if you're credit building, then of course, keep your utilization controlled. Do not chase limits if that you cannot manage, okay? And avoid stacking new debt, assuming the APR relief is coming, all right? Now, listen, guys, you know me. I'm going to put you all in position in 2026, okay? If you want to know all of the credit changes coming, we're talking if you want to buy a house, you need to be in this room. It's free to be in the room, okay? Now, if you want to lower your car payment, if you want, I'm telling you, if you have any credit goals you're looking to accomplish, you need to know all of the credit changes that have been approved that are already happening right now. Okay, you need to understand what's happening right now. This is not theory, this is preparation. In this free class, I'm going to break down what credit rules are changing versus what's staying the same. Some of you all are doing what used to work 5 years ago, 10 years ago, trying to figure out why your credit score is not moving because there's different rules now. Number two, how banks will evaluate you differently in 2026. You could have got approved for a house last month, 2 months ago, but now you've done something that you didn't even know hurt your approval, your approval chances. I'm going to explain why that is. What moves still work and what no longer doesn't work, right? I'm telling you, there's some, listen, you got to be here in order to see this, okay? How to protect yourself in a weaker regulatory environment, and also how to position your credit before lenders tighten further. They've been talking about this, okay? But either way, guys, I'm going to put you all in position. How can you get into the room? Okay, there's a couple ways you can do it. You can text the word change to 708-346-5613. Once you send that text message, we're going to send you a link. You can click that link and you can get registered for free. Okay. And if you guys are watching this on your TV right now, you could just take out your cell phone and then just scan the QR code right here on your screen. You guys know me. I'm going to be keeping you all updated because listen, we excuse me, we got a couple more things that's coming up as well that people need to know about. But either way, listen, this is tomorrow and registration is going to be closing soon. Okay. Registration is closing soon. I think there's only 8 or 9 more slots left anyway. So listen, get in if you can. All right. But either way, guys, want to make sure you guys understood that information. We'll see you all on the next video.